Hi, welcome to Lending Insights by AllCloud.
A lot of people knew how to build vehicles, a lot of people knew how to sell vehicles, they knew how to make charging stations, but who's going to finance them?
Because the tenure is going to be 24 to 36 months. It can't be a 10, 12-month period. And the battery dries out or becomes dead in the next 18 months because of the usage. Then you have to fund additionally for the battery.
I think the incentive for buying an EV for a consumer right now, especially a three-wheeler, is that the primary use of the vehicle is revenue generation.
Lending Insights is a channel where we're revealing our thoughts about the industry, especially the financing industry. Today, we're going to talk about EV financing. And for that, we have Nehal Gupta with us. She is the director of AMU Leasing. And she's been talking to people about EV financing and how AMU Leasing can become the center of universe for that. She's met OEMs, manufacturers, dealers, and across the board, trying to understand how this can be made more efficient. So we'll directly hear from her today. Hi, Nehal.
Hi, Rahul. Thank you so much for having me here.
Thank you for joining us on Lending Insights, Nehal. Electronic vehicle financing is making all the right sounds. According to the Niti Aayog report, the industry is going to go up to 40,000 crores in the next 10 years by 2030. And where we see it from two-wheelers and three-wheelers are going to have a larger share for this one. And you are rightly placed. You're already talking to a lot of players in the industry, understanding how EV financing needs to be made more efficient and how this can become the catalyst for growth, because nobody's going to buy an EV three-wheeler or a commercial vehicle without support of a financier, right? That's where you come in. So I just wanted to understand what made you take the leap, because I know that AMU Leasing has been in the industry for the last 20 years or so, and EV is something that you've taken up very recently. So wanted to hear it from you.
No, of course. Thank you so much for having me here first. See, if you talk about renewable energy sector as a whole in the country, we've seen electric vehicles pick up the most out of all the other alternatives that we've seen, like maybe solar and other renewable energy that the government is trying to promote. And because public transportation is a major part of the economy, electric vehicles was one of the first few sectors to be picked up even by the government and in terms of consumer awareness as well. So why AMU decided to start with EV was because of the immense scope that we saw, because of the amount of players that were entering the ecosystem, because of the number of government incentives, policies, and subsidies we had seen. And it was a very lucrative market for even manufacturers and dealers to start manufacturing and selling those vehicles. And when we studied the market, the largest roadblock was financing, because a lot of people knew how to build vehicles, a lot of people knew how to sell vehicles, they knew how to make charging stations, but who's going to finance them? So that was a major roadblock. And when we did a survey of all the banks and NBFCs, they are part of auto loans, they are part of commercial vehicle lending, but no one wanted to risk their bets on electric vehicle because of how nascent the technology was.
No one wants to take the
first mover advantage, yeah, because it's a huge risk. You need that risk appetite. And having an NBFC, we already had the license to lend, so we didn't have to chase banks or NBFCs to allow us to give money to someone else through our platform. So we just took the leap, I think, and electric vehicles has been growing since. We've seen a 40% month-on-month growth even for ourselves in terms of how many vehicles have been sold. And we're present in metro cities, we're present in tier 2, tier 3 cities, semi-urban, rural markets. And I think the incentive for buying an EV for a consumer right now, especially a three-wheeler, is that the primary use of the vehicle is revenue generation. It's not a two-wheeler or a four-wheeler where they're using it for primary transportation or personal use. So when the vehicle ends up becoming a business for you, then the entire ecosystem around it is very easy to understand and is very it's used as a business model. It's not a traditional lending process where you just go in the dealership and give the vehicle to the consumer, but it's also making the consumer part of the formal lending. These consumers don't come from a formal credit background. Most of them are new to credit.
Credit invisible.
Credit invisible. No banks, even the cooperative or Graham banks, have entertained them. So trying to risk your bets on those kind of customers, helping them get aware of what electric vehicles are, how you can use those vehicles, how you can generate revenue, because the opportunity cost of not taking that vehicle is maybe earning 10,000 rupees a month for these guys, versus when they pick on these vehicles, they're able to earn maybe 2 to 2.5 times more, which goes up to about 25 to 30,000 rupees as well. So when they see that kind of income and when we see that kind of demand and supply, even from the OEM's point, we see that there's a great scope for synergy, and financing was one of the major roadblocks. And we just wanted to come in and solve that part where we understand the
I'm sure
EVs.
the way you do a credit assessment of an EV vehicle
Yeah.
is not like a commercial vehicle.
It's not. It
Yeah,
can't be
it
because
can't be.
it's so new. The technology is so new.
So when I was in a forum, it was discussed as though EVs financing is financing the vehicle, but it's more like a personal loan because the bet is also on the borrower to an extent because you know that the asset is just coming up. The acceptance of the asset is not great in the market, but with financing support, it can be made a very lucrative, a very high-paying, asset for any financer.
And I think more than the borrower, the bet is on the OEM. The bet is on the technology because if you see, about 600 OEMs are currently present in the country trying to assemble electric three wheelers and selling it. Now, out of those 600, how many are going to survive in the next 5 years? What is the volume projections like? How are they bringing in capital? Are they investment funded? Are they not? So there's a lot of analysis that goes through those companies.
And I'm sure you're also taking a call on electronic vehicle manufacturers by understanding the product in detail, because ultimately we're ready to take the leap, but the risk still lies with the financier. And mitigation of that risk is also understanding the asset very well and also understanding the customer very well, right?
So I think being in the market, you understand the customer. You know the customer is the same customer that goes to an HDFC bank versus coming to an AMU leasing, right? So not that hard to decipher the customer, but to understand the manufacturer, to understand the technology. Even if I go to a manufacturer, the vehicle they're building is not hard to decode, but the technology, the battery, the cells, which countries are they getting those cells from? How are they assembling the battery? What is the performance of the battery going to be like? So underwriting that is, I think, very hard, where we need technology and where technology also plays a role.
And also, I think in this, so financing is more to do with disbursement, and then the loan gets repaid collection. But in EV financing, it's also servicing not just the loan, but also servicing the asset,
Right.
because you need to have that ecosystem to replace the batteries, to fund the batteries if you require. And I know from our conversations earlier as well that you're also thinking about that. Okay, at the end of life of a battery, how are you going to be giving a top up credit to the borrower so that the asset is intact, you're able to make the borrower stay with the asset for longer, right? Because the tenure is going to be what, 24 to 36 months. It can't be a 10, 12-month period.
Right.
And the battery dries out or becomes dead in the next 18 months because of the usage. Then you have to fund additionally for the battery. I think that's what we are also doing.
Yeah, no, if you have to be in the ecosystem, you have to understand where the players are coming from. If I create a solution and I tell everyone to fit according to my solution, I don't think that's the right approach. So you have to customize your approach to each client you're trying to approach. And how we underwrite currently, how we analyze if the battery is going to perform beyond 18 months or 24 months is by talking to the manufacturers. So we have to sign a tri-party agreement where we have to loop in a manufacturer along with our end borrower, along with the dealer, along with the charging players, because everyone is dependent on everyone at the moment. I can't alone be saying that I can finance your vehicle for 48 months when the OEM is only giving me a guarantee for 36 months. Then those 12 months, I'm entirely risking my money. So until I have that assurance and guarantees from all the players in the ecosystem, I don't think the industry can move forward as a whole. And we see a lot of young energy in the industry. So I think it's great to be part of like so many startups, and it's amazing. I think all the founders are also very cooperative and collaborative.
So I think this is one industry where you have the manufacturer also as a startup, the
Yeah.
financer also a startup, and the service guys, the battery guys also
Everyone
is a startup. So there are a lot of innovation. The way electronic vehicles is going to transform the landscape of travel in India, especially with the two and three wheelers in the city, short duration, it's going to be phenomenal. Yes, the government is saying that by a certain time, they say 2030, they want to no petrol vehicles on the roads. I think that's a vision that can be achieved.
Right.
And with proper financing, proper support to the borrower, it can be done because the borrower essentially changes the decision based on how it is offered to them, right? You offer a product, a credit product and an asset together bundled, and with an assurity that he's going to make his life better, especially in the three wheeler segment. He's going to take that offer immediately. He's going to take that leap on the confidence of the financier because he knows कि मेरा पैसा तो कम लगा हुआ है, financier का पैसा ज़्यादा लगा हुआ है. I think that's the
So if those guys are willing to invest, then maybe there's something in the vehicle
100%.
for me to run into. 100%. And it's not just about financing, I would tell you, Rahul, because it is everyone. Say if I'm financing a vehicle and that person is running from point A to point B, now if he has no charging infrastructure on that route, he will never be able to run the vehicle and generate revenue. So which is why I say that working in tandem with all the ecosystem players is the need of the hour. If I say that only financing is solving all the major roadblocks, that's also not correct, because I need five other players with me for my financing to even work.
And they have to be all glued in together.
100%.
And I think ecosystem, this ecosystem is being enabled by technology a lot, right from the OEM to how the vehicle is being sold at the dealership, because we're going to see a a situation where people are going to, like Ola, from the largest one, they've been able to get so many bookings in one day, right? And it's all online. That transformation has to come across board. It was just for a two-wheeler, but let's see that how it can go for a three-wheeler.
For the entire ecosystem, rather.
Yes.
Yeah, because see, there are two sides to technology. There's a back end side and a front end side. So front end is expected to be used or extended to the customers, and back end is what me and my team use for underwriting, for lending, for disbursement, or whatever it may be. Now I am sure of the technology providers who are providing me with backend technology. That is great. That is fantastic. That's already been set in. We have an LMS, we have an LOS system, I mean, a loan management and a loan origination system. We have a collection mechanism.
Correct.
So we have multiple vendors for that. But to be able to convince and educate and aware the customer about how to go about technology is still a task, because the kind of people I'm dealing with are all semi-urban and rural, like I mentioned. So for them, even a smartphone penetration is a big deal. So for me to expect them to use, say, boss, you use this app, you use that app, you help me this, you help me with login. It's still a task.
So we
It's
have to
still,
make it very simple for them,
Yeah.
because simplicity is what will drive them to adopt a technology. And any which ways, and once they get an EV vehicle, they will have to work with an app, right? That's where will be our call to push, the servicing technology on the same mobile phone,
right.
and then interact with the customer, understand what he needs. Even for collections, it can be made very simple. Right? Digitally, just sending a link and getting a payment done is easy now. From a technology perspective, from an adaptation perspective, we still have a long way to go.
To go. Yeah. I mean, I would say collections has still become more soft because of the UPI system, because of easy phone transactions that customers are able to pick up very fast. Uh, but just on the onboarding side, on how to acquire the customer and how to retain the customer with technology is still a challenge because of the sector of customers we are dealing with. Yeah, but I think with awareness and with higher penetration of financiers in these smaller areas, through word of mouth, through awareness, people are picking it up. People are understanding what financiers are like us are wanting from them. There's good support, but there's still a long way to go, I
So
feel.
there's an approach that we also champion called the phygital approach, where it is not all digital. It's
Physical
is it
and
physical and
digital.
digital, and
Yeah.
that's the approach we
Yeah.
will see a lot coming in the market.
Right. I think that's already working. Even if I say I have an app for customer onboarding, I still need a representative present there to guide my customer and handhold my customer to how to go about this, and what lending is. Half the people are so unaware of what lending is, what financing is, because it's such a cash intensive market.
That they would want to come
Yeah.
and pay and pay the EMIs
100%
in
for
cash.
them to leave cash and move to phone and digital with no papers, no money, no physical cash in hand. It's a dream for them. They don't understand if they're being scammed or if it's an actual deal. So yeah, I think that's the behavior we've been observing. But I think
So, well, understanding the financing aspect of it, and we've also seen that we've completed certain number of funds with you in the business. How do you see mitigation of risk? Because ultimately, finance is a function of risk and reward, where you are deploying an asset and then you want returns out of it. What are the mechanisms that you think will help you reduce the risk in a EV financing, and what is the kind of support you still need? I know that you've already said that manufacturers have to support you, but what's the kind of other mitigation parameters that you are deploying to make sure that the portfolio remains healthy?
right. So to answer your first question, how do I mitigate risk? There are two factors any lender judges that on. It's the intention of the customer to pay and the capability of the customer to pay. The kind of markets we are tapping in the north and in the south, very strategically on which metro cities to target, which smaller cities to target, those customers have one of the lowest default ratios, because those kind of customers consider this specifically a three-wheeler, a very, very sacred primary revenue generation vehicle. So for them to default on that vehicle is, as good as not feeding their family. So that kind of mentality and that kind of intention is a very, very big plus to us, because once we know the customer has the intention to pay, if he has the money, then we are good, right? Because that's what collection is about. And the capability to pay comes with the kind of technology they are using. So now if they're using a passenger vehicle, they know that they're going to earn, say, an X amount every month, and they know that out of that X amount, this percentage I can give to the lender. So there's no problem with capability, there's no problem with intention. So for me to mitigate that risk is very easy, because now I'm betting my entire risk on the customer. I see how the customer is placed, if they have an own house or not, how much have they been earning, do they have secondary revenue
Source of revenue.
sources? Yeah. So that way, underwriting is not hard. Understanding the customer is not hard. And your second question was how?
What is the kind of support you think the manufacturer or the dealer
Yeah.
should provide a financier in the long run? Because
Right.
when you're selling the vehicle, it's all
Yeah.
about sales. Everybody's trying to
Yeah.
sell the vehicle. The dealer is trying to push the product, and then we are trying to push the credit from AMU's perspective. But when it moves beyond a certain 10 or say 18 months down the line, what is the kind of support a EV financer would require from the manufacturer? I think that's something that the whole industry will benefit from.
Um, Manufacturer plays a pivotal role in creating a customer relationship, because the customer is sold not through the dealer, not through the financier, but the manufacturer,
The brand.
the brand. They say that I have bought it from brand X, so they want to be associated to brand X, and for that, brand X has to entirely service and support them to the longevity of the vehicle. It's not even just for 2 years or 3 years, but outside the warranty also. Say if some part breaks down and the customer wants to go to the same company service center, then they should not deny the customer and
service.
say that, boss, our relationship is over now, we don't care about you.
So
You know,
post-sale service is like
post-sale service, building a customer relationship, and most of these manufacturers have authorized dealerships. So the mandate they get from the OEM, the dealerships, it's a huge different ball game. When they are being told by the manufacturer that you have to service the customer, you have to be nice to the customer, and you have to provide any spare part they may need, any mechanical failure they may need. So that kind of support, I think, is what retains the customer.
I think the intent and capability from the borrower is one thing, but the intent and capability of
from
the manufacturer is something
100%.
really important. So EV is a very simple technology, right? It's very simple than a
So to
normal
say.
car or the petrol driven or diesel driven vehicle. The less number of spare parts, the less number of moving parts in the thing, but to make sure that it runs perfectly well, as you really said, the manufacturer and the dealer have to be buyed in or glued into the concept of post-sale service and making sure that their brand stays. And that's where you get the comfort of financing that particular vehicle as a EV financer.
Right. No, because if you don't have an onus in the deal, then the kind of relationship that you may have with the customer is not guaranteed. So if I know you've put down your money on the table, you've put this agreement on the table, and you've promised us as a financier that you're not going to leave the customer, then that's the promise we bank on, and that's literally what I'm hedging my bets on. Because the customer can run away anytime, the dealer can run away anytime, but the OEM is to stay.
OEM has to stay.
OEM has to stay. OEM is getting all the incentives and the policies from the government. They have the right kind of technical support. They have the right kind of technology in terms of manufacturing facilities and whatnot, manpower capabilities. So they are the primary players we expect that kind of support from.
Speaking of government support, even the EV has been categorized as a priority sector lending.
Yeah.
Right. How does that play out? Does it incentivize you to add more or increase the loan to value from a lower percentage to a higher percentage? Is that something you guys are doing to take benefit?
So PSL for electric vehicle is still fairly new. People are still adopting it. Banks are still getting used to it. Largely, financial institutions are treating it as part of their CSR activities, because EVs not still come into mainline lending.
So it's just like the talking about stuff they're doing.
It's a hot market, but just in the air. So there's actual implementation is still a long way to go. You hear about ESG, impact funds, and sustainable development. So electric vehicle largely falls into that, which is also a minority percentage of their entire operations for any larger financial institution, if I talk about. But for us as AMU, it is our core expertise. We are the only largely NBFC that caters to the entire EV ecosystem, not just vehicles. So, so having that kind of mechanism built just for electric vehicles is, I think, a very beneficial proposal to the ecosystem players that are now coming in. Because if you have to chase a bank, they might give you longer tenures and cheaper rates, but if they don't finance your product, then what are you going to do with those kind of features and benefits, right? So
That's the difference between a large financial institution, right?
it
They
is.
take time to move,
It
right?
is. It
But
is.
when we are, the NBFCs,
Yeah.
where the segment is very agile,
Yeah.
you're like a cheetah taking the leap rather than the elephant trying to dance.
Because even if the banks want to jump in right now, there's not enough supply in the market for them to say like finance 1,000 crores of vehicles. There's not enough vehicles on the road to finance that kind of.
But when
So
it comes to it, I think a great opportunity for NBFCs would be to work with banks in a co-lending arrangement, right? That will leverage your skill, the NBFC skill, to deliver credit, and the bank skill to deliver the fund. I think that's a win-win situation for both of you guys.
yeah,
Right? The
yeah,
NBFC front-ending everything, you're able to grow your loan book, and the bank then gets a share of it, even in the priority sector lending, because that's their mandate, and also a very secured way of extending into a new market for them.
right. Because they don't want to directly get into retail lending. They don't want to get their hands dirty directly. So we are the perfect pawn to get to that market. But government and PSUs are also providing credit guarantee schemes. So, wherein if I'm taking a risk on, say, customer X, they'll give me a first loss default guarantee of X percentage that you go ahead, do this loan. I'm going to guarantee your returns in the future. So, that kind of support obviously gives us a push to get out in the market faster in a more aggressive way. But again, dependent on the entire ecosystem, how people are moving. Because little off track, but recently I just heard that people were misusing subsidies in some parts of the country. So when you see that kind of those kind of plays happening, then you're not very sure of
Yeah.
how do you want to go about trusting a
You always
player.
have to be
And
on your toes to
yeah,
understand what the customer is
and
doing.
your credit underwriting model also keeps evolving. Even if I'm co-lending with the bank and the bank is depending on me to underwrite that process, and if my underwriting is now weak because the dynamic nature of the market, then it makes the bank also wary to enter the space, and even through me or through directly to the customers, it's
But yeah,
a
with the
challenging
kind of
space.
setup an NBFC has and you have, I think it's going to be very easy for you to become more adaptive to such changes. Right? You're always
To
on
keep
the ground.
evolving.
The ears are always listening to what's happening in the market. We
Yeah.
are seeing what's happening firsthand. And to change it also, it's very easy for us today. I think that's the most important thing that an NBFC brings to this particular market in the EV financing segment. And I think my personal view is that had it not been the NBFCs taking the first mover advantage or the leap, you call it, EV financing and or the market share that EVs have got today would have been a little difficult.
It is, because even if you reach out to fintech platforms who claim to do these kind of lendings, who's backing those fintechs? It's either a bank or an
NBFC,
NBFC.
correct.
Unless you have a license to give money out to any X entity, it can be directly a manufacturer, dealer, a fintech player, or a co-lending player. You need that license. You need that kind of understanding of the financial mechanism of it. So NBFCs do play a great role in that. And even the larger NBFCs that are not part of the ecosystem now will eventually get
Eventually come
into
to
it. It's just who's going to do the proof of concept, who's going to understand the market first, who's going to take that risk first.
And once
So
that is said, then the people will start
following.
it.
Yeah.
Yes.
And unless that kind of fund flow is seen in the market, the industry can't grow, because smaller players like us can't cater to the entire country. So we need larger players to help regularize the market. So we are also in a better position to offer cheaper services, which are not so cheap at the moment because of the nascency of the ecosystem.
So a lot of people doing good thing together, I think, will have the larger good, right? So definitely there have to be a lot of players in the market. There have to be a lot of NBFCs working, the banks supporting, the government incentivizing the whole ecosystem.
Right. Right. How's All Cloud been doing as, say, in the auto loan sector?
Auto loans has been our forte.
Yeah.
That's where we started. That's where we have a lot of customers as well, and the confidence what we gain from their scale and growth, makes us do better. And from an EV perspective, also we are working with a lot of players. I think about 7 to 8
Oh,
of
wow.
our customers are in the EV segment, and
Or pouring into it now.
yes, are pouring into it. They are at different levels. Some are on the wholesale side, some want to be on the retail side.
So you've also seen a different mix of.
Yeah, we understand the market, we hear from them, and the product also is shaping to that regard. But yeah, we're also betting high because EV is a it's a logical progression for an automobile, right? So in that case, all our customers who are doing traditional vehicles today would move to EV in the next 2, 3, 5 years, or will have to move if they
You have
want
to
to in
prepare your
business.
platform
Yeah.
accordingly.
So we are ready. We are ready to integrate with a lot of players in the EV system, like even the GPS tracking mechanism system that has to come into the LMS.
So do you think there are a lot of changes that happen against a traditional commercial vehicle or an auto loan that happens versus an EV loan outside of integrations or APIs?
No, the underlying parameters are the same.
Okay.
Right? The EV vehicle is only helping these technology systems to be put in very easily. So we've had GPS mechanisms way back in 2012 and 13 as well, right? And they have been used, but the cost was too high. The technology was still developing.
Adoptability was low.
Yeah, but now it is all API driven. It can two systems can talk very easily, right? So even the battery mechanism, the battery switching, swapping mechanisms, the as I said, the GPS mechanism, all will fall into one place.
Yeah, yeah. Because just a small example, I think if we talk about battery financing, now I know we have a platform for vehicle financing, but now if you top up a battery, you have to lease a battery. How do you go about that? So there's
It's a simple top up loan. So
Yeah.
earlier, vehicles used to get a top up loan for their insurances and tires. Now they're going to get it for
for
batteries.
batteries.
So that's a having the system
Because
is
it kind
there.
of changes. Just a
Things
pivot a
have been,
little
yeah,
bit
it
of
has to change a little bit here and there. Just understand what is the use case, and the financier and the whole market has to adapt to it.
Right.
So, Nehal, we've talked about the whole ecosystem, right? Talked about how the vision of the government is, how the manufacturers are playing it out to make it big in the EV financing segment or the EV segment per se. Where do you see AMU putting in their money now, and where do you see the growth coming from?
See, everyone in my team knows, and the entire management of the company knows that our vision is to finance 1 million electric vehicles by 2030, which is a large number to envision at the moment, given how the penetration has been. But we are very solid on our vision, and we know we want to get into that ecosystem. And when I say 1 million electric vehicles, that also includes the entire ecosystem, not just vehicles and silos, but charging players, battery players, like we talked about, battery swapping, battery leasing, battery top up loans. So we want to be a pioneer to achieve the entire ecosystem financing and be one of the first few to do that entirely and not finance any other sort of alternative technology there, which can be internal combustion engines, right? So that is our mission and vision. We're very clear on that. In terms of growth, we know there's a lot of demand, but we're currently struggling with supply in the market because of how the auto industry has been crippled overall because of the pandemic and how the component supply has been on and off. It's just reached a peak last week, the auto component sale. So market is picking up now. We understand that, but we also have to plan our growth trajectory in tandem with the market growth. So if I say I want to finance 1 million vehicles by 2030 and if there are not as many vehicles on the road, then that vision doesn't stand true. So the hope is that the market is going to grow like that. A lot of my financier contemporaries are also very supportive, very collaborative. So we've had very productive discussions about, if there's a lead coming to you, how can I get in on that, and how can we co-lend together so that we're all part of the same community and the growth trajectory for each other. But AMU independently has seen immense growth since we've commenced our operations. Last November, we've seen a 35% and a 40% month on month consecutively the last quarter, which is great. And I think that's the same rate at which OEMs and dealerships are also growing. So, which is why I say that it's all interdependent on the growth of the entire ecosystem. But we have good hopes from the industry. I think all the players are doing well, and we stand by our mission and we plan to achieve our goals.
I'm sure that's going to be a reality very soon, and we at All Cloud are looking forward to it and support you guys in whatever part we play in this whole journey.
You play the most important part. Trust me, all the loans are going through your software, so works as well.
Thank you, and it was fantastic having you. And I think we've relayed out our thoughts really well, and the whole EV financing industry as a whole will progress And we'll keep talking about it because that's where we see a lot of excitement. That's where we see a lot of market activity. All right. So thank you, Nehal, for joining us today. It's been a fantastic conversation. And Lending Insights by All Cloud will keep hosting such interesting conversations, monologues, dialogues with a lot of people across the industry. And I'm sure we'll have a lot of input from our viewers as well. So thank you and look forward to the next video.
Thank you so much, Rahul. Thank you for having me.
Thank you.